What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is April 6th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about what we need to see Bitcoin continue to do over the coming days, and along with that as well, why we're continuing to remain confident over this past week or so of pullback in price action as we've gone from around $48,000 down to $44,000. We've got lots of things to dive into today's video right after our quick sponsor. And our sponsor for today's episode is TaxBit. The 2021 tax season is here. When it comes to crypto, dealing with taxes can be difficult, but it doesn't have to be. TaxBit helps you calculate your tax obligations on your cryptocurrency activities by plugging in your various exchanges and crypto platforms. With support for over 481 crypto exchanges, you can track your crypto accounts and wallets with ease. And thanks to the TaxBit network, your exchange likely provides free tax documents powered by TaxBit. If you're interested to learn more, check out the link in the description below and start this year's tax season off with ease. Alrighty, everyone, so let's go ahead and get things kicked off here. I want to start by diving into Bitcoin's price here. Ever since back here on around the end of the month for March, as we go into the month of April, we've been seeing a cool down in Bitcoin's price coming from around the $48,300 range down here towards $44,600. In total, this isn't really a major correction coming from top to bottom here. We've only seen price come down about 7.5%, but it's a familiar price range, one in which we talked about just a couple of days ago, back here around April 1st, when Bitcoin had pulled down to $44,500. Now, why is this range significant? Well, we've chatted about this before. This is a range that, again, served as previous resistance for the past couple of months, really throughout the first quarter of 2022. And this is, again, why I'm a big believer in the concept of naked trading, basically focusing on support and resistance ranges and not so much focusing on the RSI or various other technical strength indicators within the market. And all the while those can be incredibly valuable, we can see right here that the market is testing something critical. It's trying to see whether or not here the bulls, or the buyers, potential buyers in the market, are going to outweigh the potential sellers here at this price range. Back here throughout history, whenever we would come back up to this range, sellers outbid buyers. AKA, there was more sell-side pressure than buy-side pressure. Every single time we got here, there was some amount of investors, more sellers than buyers, who felt that they needed to take profit at this range, rather than new buyers who thought, I need to buy at this range, so price would go up. And that's, again, the whole concept we've been talking about inflows and outflows, limit orders, whether it be on the bids for the buyers or the asks for the sellers at given prices. It could have been those various two factors that really weighed down price. And we can see back here that we've not only come up above this range here back towards the end of March, so we've cleared through that resistance, but it is very likely, and not only not that, but it's healthy for price to come down and make that new range support. Now, the reason why this video is focused on the whole concept of the spring up here in Bitcoin, as you guys can tell from the title, is that I think it's going to be foundational for us to retest this range as we're doing now, possibly even one more time or so, in order to solidify the previous quarter of resistance as a foundation to start moving higher for the next rally. This is kind of tried and tested when it comes to uptrends, not only in Bitcoin, but in a whole range of other markets to turn previous resistance into support. And it is so true for crypto here. So again, I just want to emphasize that we're likely going to be retesting this range for a while. You guys know that I've got my general rough outline here that we've kept untouched. It's been proving to be very valuable as we've been, for the past couple of months, calling for this rally up here towards the May here, in this case, towards around the $65,000 range, maybe even setting in a third set of new higher highs here for the all-time highs. But again, expect that you're going to see some chop here. And the sign that's going to be showcasing that spring up is ready to move in is when you get a rebound in price here off that support range, and when you set in a low that doesn't revisit back down here to the line of support, but instead trends back up towards the highs and really signals the kickoff in price. That's the common technical pattern you're going to find here. It's almost a V-shaped recovery here in the short term with those higher lows and higher highs versus the lower highs and lower lows here within the very short-term time range. But overall, the broader trend is bullish here, guys. And that's why we're not only in favor of the idea that the market's going to move higher. It's not just me sharing my personal bias. It's just what price is telling us. If we're looking at the relative trend here, if we're looking at the longer-term trend, everything favors the bulls here. take a look at the past couple of weeks or months, you're going to see that the bulls are in favor. Price is moving higher. You want to talk about the longer term trend? Yeah, all the while the market hasn't been in an absolute parabolic rally like it was here in 2020, it's been consolidating higher with higher lows and higher highs, not indicative of a bear market. Now, one thing I do want to talk a little bit about as well, not just to hone in on Bitcoin, is just generally the market sentiment. I understand right now over the past 7 days or so, we really haven't had too much momentum in many cryptocurrencies. Most of them are down in the red following the slight pullback in Bitcoin, as many of them were outpacing Bitcoin over the past couple of weeks. But again, I want to emphasize here what might be going on in the market. Not only is Bitcoin testing resistance and seeing if it can make a new support, but Ethereum is doing the exact same thing. As you all know, I like to generally focus again on price levels as we did on Bitcoin, and we can see here that Ethereum, after having a really solid rally here, just to put it in percentage perspective, we can see here from the lows down here up roughly around 18 to 18.5% here just over the last 30 days against Bitcoin, right under a 20% rally here within a month against Bitcoin. Now starting to cool down here and see whether or not it can turn this range of 0.73 to 0.74 into new support. Now, why is that range significant? Is it some psychological level? To be completely honest with you guys, I don't really think it's per se a psychological level. It's not one of the big even levels that people usually look for. But if we take a look back at history here over the past, pretty much the past couple of months, or back into the summer here, we can see that this is where there's been previous resistance, contestment here in price, resistance, a breakthrough which continued the price higher, support, and also failed support here, and also previous resistance. So this level has really been a range where price has played tango. It's been a support and resistance in the past, and now as we've broken through it, as it used to serve as resistance, or at least we were below that price range, it looks like the market is now trying to test to see whether or not that can become support. Is there going to be enough bids on the order book to provide support there, right, for potential market order sell flow? And on top of that as well, is there going to be market buyers who come in and start pushing the price higher? Those are the two things that are really going to see whether or not price can sustain at this range. And if we break through there, it could be likely that we come down towards a lower range here, possibly setting in a slightly higher low like we've done many times here in the past. Like maybe, for example, like we did back here in July and August, where even though we faded most of the gains, we still set in a higher low, and then we continued higher about a month and a half later. Now, another thing to watch here as well, not to lose sight of things, even when Bitcoin and the market pulls back a little bit, we are still up from 56% to 58% here for altcoin dominance, with a little relative high here of 58.5%. And it still looks like the trend here is playing out to what we've been talking about since back here in May. This kind of consolidation of higher lows, consistent highs, an ascending triangle, setting up for a breakout sometime here going into the month of May, where altcoins could really start to surge higher. I don't know exactly when it's going to happen, but I do have a feeling here it is likely, more than not, to really kick off as we go into the later phases of April and more likely into the month of May. With Ethereum coming in strong over these past couple of weeks, showcasing the resiliency, confirming the bullish upward movement in the market versus what I think many people suspected, which was a downward movement in altcoins against Bitcoin and an overall bear market. We are now seeing the prices are signifying that the next wave is upon us, that the supply and demand economics that drives prices higher and drives prices lower, they are playing in favor of the bulls here. Now, why am I so confident in this? Because altcoin dominance, generally speaking, and the overall trend of the altcoin market. And I want to kind of go ahead and make a major point here, which is that all the while for years, people have focused in on is if Bitcoin is moving up, altcoins are going to be moving up. And I think that that trend is generally true on the macro scale. Like if you're talking long-term time frames, yes, if Bitcoin is appreciating, it trickles down into altcoins to a degree. But what I would even go further on in saying is that if Ethereum is generally moving higher, altcoins are usually moving higher as well. It doesn't mean that they're outpacing Ethereum at all times, but it generally means that they're going to be outpacing Bitcoin, right? And that, again, it leads to more altcoin dominance. When more and more the market is consuming market share, right, that is generally a period of time we want to be exposed to altcoins, right? So just taking a look back here in the chart, I think that Ethereum is really leading the way here. We've seen the higher lows in Ethereum, And that helps us to understand here why altcoin dominance is growing. But on top of that, you've got a whole range of other protocols that are starting to eat up that market share. A lot of those other layer 1 protocols like Luna, Avalanche. We've also got some of the other various places like Solana out there, right? And no matter if I'm a big fan of them or not, they are taking up some of the share of the market. Now, if you guys are interested in kind of tracking what altcoins we're watching within the market, you guys can always check out the Dash Report, our newsletter here on the channel, where I cover through not only crypto markets, but do a whole macro sweep against equities, commodities, and Forex. There's a link down below in the description. You can get 20% off if you sign up for an annualized subscription, but it's a great way to support the channel. And if you guys like getting more content beyond my ramblings here on the channel, it can be a great place to go to. But one key thing that I do want to emphasize here is talking about ETH 2.0 and the upcoming upgrades to the network, right? We've got the merge here, moving from proof of work to proof of stake, and along with that as well, we've got the shard chains launching probably in Q1, Q2 of 2023. These two events are going to shape Ethereum to easily outpace Bitcoin. I'm not saying it's programmed in, I'm not saying it's guaranteed, but I gotta be honest with you all. Let's just say I put my money where my mouth is, and I've never been so confident on one of my bets in the market, right? Now, it's not to say that this is going to be some crazy, 5, 10x against Bitcoin or anything like that. I think Ethereum is really only going to 2x against Bitcoin in this cycle. Maybe, if we're really, really lucky, 2.5 or 3x. But folks, I understand like people are so wanting to make 50x returns and do this and that, which is just so far and few. You're likely not going to be a part of the group of people who make those kind of returns. But if you can already invest in an asset like Bitcoin that does great, and you can find an asset that you can be pretty confident will probably do a 2 or 3x against it, the kind of returns that you can make in that period of time are phenomenal. They are life-changing. And I think the reason why we're so confident here for Ethereum, at least why I'm so confident of it, is because of the supply and demand economics here, that more and more Ethereum day by day is getting locked into the staking contract. And it's important to note that even when the merge happens, which is likely going to be sometime in May, as it is set to be in Q2, and everything seems to be going according to plan, it's important to note that when that merge happens from proof of work to proof of stake, it will change the inflation rate towards a more favorable level for Ethereum's monetary policy, constricting supply even more. And on top of that, the ETH from the staking contract is not going to be unlocked. It's going to remain locked. Think about that for a minute. 11 million ETH is not coming out into the market until shard chains come live. And even with that, I think it's important to state that all those people aren't looking to sell right away, right? But even, of course, if you had 1 million, 2 million ETH from there, yes, that would cause some sell-side pressure once that comes unlocked. But that's not going to be until shard chains, right? So we've got a continuous lockup of more ETH supply into these contracts over the long run, restricting supply. You've got EIP 1559 burning Ethereum for each and every transaction, further reducing supply. And you've got demand remaining relatively the same, if not continuing to increase, either setting in kind of neutral growth here for new demand or growing higher here. And that is inevitably going to be lead prices to go higher here. It's plain and simple. It's supply and demand. And I think that we're continuing this setup here in the market. There's nothing that's changing this, and that's why Bitcoin, Ethereum, and leading cryptocurrencies have really been some of the best bets in the market and have continued to perform, or outperform for that matter, traditional asset classes, even during such a crazy time as we've been living through. So anyways, guys, that's it for today's video. I've rambled on long enough. If you enjoyed this video and you liked what we covered here on the channel, feel free to drop a like, consider subscribing, hitting that bell icon so you don't miss another upload here on the channel. And if you guys have something you want to add to the conversation, whether you agree or disagree, feel free to leave it down below in the comments. I'd love to hear from you guys and get a conversation going. But until the next video, thank you all so much for watching, and I'll see you all in the next video. Take care, everyone.